So, good morning, everybody, and thank you for joining this session with the Cambridge Center of Alternative Finance, which is part of the Cambridge Business School. My name is Dr. Alexandra Apostolides, and I'll be effectively being the compere for this session. I would like to introduce our colleague, Patrick Conteh, the regional lead of SSA, to introduce the team and introduce what we are going to show to you today.
Thanks, Alex. Thank you foremost, MAF, the ECB, Economic Development Board of Mauritius, the African FinTech for inviting CCAF, the Cambridge Center for Alternative Finance, to be part of this year's AFF event. This morning I have, as part of our team here, Alex already, who has introduced himself. Alex is the research lead based out in MENA and APAC. Next, we have Tania. Tanya is our market lead. Please wave to the audience. Tanya is our market research lead. And then we have D. Allen. D. Allen is our head of CB&E, Capacity Building Education. Please wave. And then we have Saya, is our regulatory researcher for SSA region. We're here this morning for a presentation. Next slide, please. Basically to provide highlights of recent happenings in Sub-Saharan Africa vis-a-vis the FinTech ecosystem. But just by way of intro, the Cambridge Center for Alternative Finance was established in 2015 at the Cambridge, as part of the University of Cambridge. We are a research center. By headcount, I think we are the largest research outfit in Cambridge at this moment. What we are dedicated to really is to the study of technology-enabled and innovative instruments and channels, and systems that are emerging outside traditional finance. And this includes things like crowdfunding, marketplace lending, alternative credit, investment analytics, mobile payments, cryptocurrencies, etc., etc. We have published over 40 high impact studies. We've surveyed over 5,000 FinTech entities spanning over maybe 130 jurisdictions. We've handled over 180 regulators, trained over 1,000 regulators over the last few years. Our mission actually, as I said, is to create and transfer knowledge, addressing the emergent gaps in the financial sector that support evidence-based decision-making. Next slide, please. And that is driven by three pillars. Our three pillars of change are data and insight, that is research, use of our own digital tools, providing further insight or in-depth analysis of those data, and then capacity building and education, which my colleague Dee will allude to subsequently. For this presentation, actually, next slide, please. The highlight of what is happening in Africa are these as far as the center goes. After my brief remarks, we're going to provide emerging findings. This is a study that we are just wrapping up. It's the first FinTech regulation study of SSA. We're looking at SSA, MENA, and the APAC region. The SSA study has just been concluded. The final findings are being put together. These are emerging findings of that report. So really, it's a privilege that we can share these findings ahead of publication in the next few weeks. And then my colleague Dee will talk through the Cambridge FinTech and Regulatory Innovation Program. This is like something we are customizing for Africa. So Dee will go into specifics of this program, how it meets the context of Africa. And then my colleague Tanya will take us through the ongoing Global FinTech Market Impacts and Resilience Survey. This is coming on the back of last year's survey. We'll hear what's trending and exactly what is it that we need the FinTechs in Africa to help us conclude this or wrap up this survey. And then lastly, there's we want to provide direction here for especially FinTechs. Together with Catalyst Fund, we have put together what we call regulatory guides, for FinTechs in emerging markets, specifically Nigeria, South Africa, Kenya here in Africa, and then India and Mexico. This is really, really, really very good. That's really that's the website. This provides guide, to FinTechs. How can they go about navigating the often difficult terrain of regulation when it comes to FinTech? So we encourage those who are present to look up the link and see what they can make of it. And lastly, as part of our highlights as to things happening in Africa, together with BFA Global and Catalyst Fund tomorrow, we are presenting what we call the recovery technology sprint. Basically, what we've been doing over the last 2 years is to simulate post-C-19 situations. How would fintechs, become more inclusive and more involving in the recovery process? What would fintechs and the regulatory authorities, need to do? So we are simulating different scenarios. Tomorrow it will be interesting. I'm inviting everybody here present to be part of this presentation tomorrow, because tomorrow we'll be presenting the proof of concept, as to how these things are unfolding, the potential scenarios we envision in areas like Egypt, Kenya, South Africa, and Nigeria. So these are the 5 highlights really that CCAF is presenting at AFF this year. So next, we'll listen to Sarah and Alex, who will present highlights, and I have said emerging findings on the first FinTech regulation study for SSA. Thank you all.
Thanks, Patrick. Good morning, good afternoon, and good evening to you all, wherever you may be. It's my pleasure to share with you the findings of the CCAF study on the regulatory approach to FinTech in the SSA region. And please keep the Q&A coming in the chat. We'll be able to address some of these questions at the conclusion of the presentation. Next slide, please. So this is part of a series of regional reports, as Patrick mentioned. And the report is a landscaping study that seeks to do 3 main things. The first is to provide insights into the state of regulatory frameworks across key FinTech verticals. You will see on the slide some of these, including e-money, digital payments, international remittances, peer-to-peer lending, and equity crowdfunding. Secondly, we seek to evaluate frameworks in important cross-cutting areas, including cybersecurity, open banking, among others. Third, we seek to map existing regulatory innovation initiatives in all SSA jurisdictions. Now, in terms of the overall aim of this report, we wanted to create regional insights and disseminate lessons learned on the regulation of FinTech activities, both regionally and cross-regionally. And in order to do this, we identified 20 SSA jurisdictions where we had at least one regulator who responded to previous CCAF surveys in 2019 and 2020. We also collected survey responses, undertook a desktop review of these regulatory frameworks in these jurisdictions, and supplemented this with bespoke surveys. Next slide. Now here you can see a map that shows a geographical distribution of sample jurisdiction, and you can see we had representation from different jurisdictions in Africa, so East Africa, West Africa, Central Africa, and Southern Africa. And just important to mention the fact that this were both from common law and civil law jurisdictions. So half of them from common and half of them from civil law. And another thing to just note is that North Africa is going to be covered in a forthcoming MENA CCAF study. And something else just to highlight is that in terms of the regulatory innovation initiatives, we looked at the whole of SSA and not just these 20 sample jurisdictions. Next slide, please. So looking at the SSA market based on findings from the global COVID-19 FinTech market rapid assessment study that we published last year, our overview of the SSA FinTech market indicates broad growth during the COVID-19 pandemic. On aggregate, FinTechs from the SSA region reported growth in transaction volumes, customer acquisition, and retention of existing customers. Across all regions, SSA reported the second largest growth in transaction volumes, and this was between the first half of 2019 and the first half of 2020. Next slide, please. Following that brief background of the SSA FinTech market, we turn now to the regulatory findings. And let's begin with an insight on how COVID-19 has affected the prioritization of FinTech within regulators in SSA. And here, as you can see from the figure, the increased digitalization of financial services in light of COVID-19 has meant that FinTech has become or remained a high priority for regulators. And we see in the figure that 70% of the SSA regulators who responded to the COVID-19 survey reported that FinTech has increased as a regulatory priority due to the pandemic. This perception of increased prioritization is matched by evidence of substantial growth in FinTech transaction volumes and customer acquisition in SSA during the pandemic. This growth was more pronounced in SSA jurisdictions, which had more stringent lockdown measures. And it is notable that growth in FinTech transaction volumes and customer acquisition in SSA are higher than the global average. Next slide, please. So turning then to the specific FinTech verticals that we examined as part of this study, we begin with a look at digital payments. And the payment sector is a dominant FinTech sector in SSA. With regard to digital payments in particular, the study findings indicate that this is a highly regulated sector. And what we find is that 95% of sample jurisdictions in SSA have established frameworks for digital payments. And more specifically, digital payments is mostly regulated under more general regulatory payments frameworks than sampled SSA jurisdictions. Indeed, in the SSA region, digital payments is one of the fastest growing FinTech verticals in some jurisdictions. And this growth in digital payments has been seen as an avenue for expanding financial inclusion. Next slide. Now, turning then to e-money, which is a key subsector within digital payments, we see that SSA has demonstrated the potential of FinTech through the successful mass adoption of digital payments, mainly offered through mobile phone operators in many jurisdictions. And the study findings demonstrate that 95% of sampled jurisdictions have a regulatory framework for e-money. And in those jurisdictions with a framework, 42% of jurisdictions regulate e-money through a general payments framework with explicit provisions that cater for e-money. On the other hand, 58% have enacted e-money frameworks to cover such activities. And as you can see from the slide, SSA has the highest, a higher proportion of jurisdictions with a specific e-money regulatory framework in comparison to MENA and APAC. Next slide, please. Now, turning to peer-to-peer lending, this is a FinTech vertical that continues to be a small but growing segment of the financial services marketplace in SSA. And here, as you can see from the figure, that whereas 32% of the sample jurisdictions in SSA have a framework that regulates P2P lending, a further 26% of jurisdictions are planning to introduce a framework. Significantly, the coverage of regulatory frameworks of P2P lending is relatively lower in SSA in comparison to MENA, where it's at 55%, or in APAC, where we have 50%. The findings also demonstrate that there are various consumer safeguards that regulators have been putting in place or seeking to put in place to mitigate some of the risks of P2P lending. And examples of these include limits on borrowing, restricting the types of investors P2P lending is available to, and capping of interest rates. And these are welcome developments indeed, given some of the consumer protection concerns that P2P lending has given rise to in the region. Next slide, please. Now, when it comes to equity crowdfunding, according to the findings, there is an equity crowdfunding regulatory framework in 34% of the sampled SSA jurisdictions. Similar to P2P lending, the number of sampled SSA jurisdictions with a regulatory framework for ECF is relatively low in comparison to MENA and APAC regions with 69% and 82% respectively. Notably, we have a further 33% of sample jurisdictions in SSA who are planning to introduce an ECF regulatory framework. Next slide. Now, turning then to the cross-cutting regulatory areas, we also investigated how these can affect FinTech market development, and cybersecurity is a key area in this regard. It is positive that there are national cybersecurity frameworks in SSA, but also notable that less so in terms of financial sector specific cybersecurity frameworks. And the lack of existence of a financial sector specific cybersecurity does not a priori mean a lack of capability of ensuring adequate cybersecurity in the financial services, but we note that financial sector specific frameworks are notably lower in SSA in comparison to MENA and APAC. Next slide. Another important cost-cutting area is open banking. And this is an area that is directed at rebalancing retail banking and related financial services. An open banking mandate seeks to enable increased competition and customer choice and realize the potential of digital financial services further. Now, a low proportion of jurisdictions in SSA have open banking regulatory frameworks at just 10%, which is substantially lower than other regions. In particular, 23% of sampled jurisdictions in MENA and 30% in APAC have open banking regulatory frameworks. Next slide. Another important area is EKYC. Now, EKYC is an important process of AML, CFT, customer due diligence. And ensuring that this process can take place digitally is a key driver of innovation in DFS. And this has helped to reduce costs of onboarding as well as minimize risks of identity fraud. Now, there has been some progress, but more work needs to be done to ensure that digital infrastructure is in place to enable EKYC. And the ability of DFS to scale is linked to onboarding clients electronically and ensuring AML provisions have been followed. So here, the role of EKYC as an enabler across fintech verticals is highlighted. And as you can see from the figure, many SSA regulators in the sample allow for EKYC, either through existing EKYC frameworks at 47%, through a specific framework at 5%, while only 11% of jurisdictions specifically prohibit EKYC. Next slide. Now, here is a geographical distribution of the regulatory innovation initiatives in SSA. And here we see some very positive and interesting results. The map on the left illustrates that there are currently 9 jurisdictions with an innovation office in SSA. This represents a significant increase over the past 2 years. A study in 2019 by CCAF identified no innovation offices in SSA at all. The map on the right, on the other hand, shows that there are 10 jurisdictions in SSA with at least one operational regulatory sandbox. There are also a further 6 jurisdictions that are planning to introduce a regulatory sandbox. And there are discussions for cross-jurisdictional initiatives from BCEAO, the Central Bank of West African States that share the CFA franc. So this is significant progress as these initiatives can support the formation of an enabling regulatory environment. Next slide, please. Now, this figure represents a jurisdiction by jurisdiction view of the prevalence of regulatory frameworks across fintech verticals that have been considered in the study. And this figure does not seek to rank or even to score different jurisdictions in their approach to regulating fintech, but instead to show the range of approaches in the region. And we see that there's almost complete coverage of frameworks on digital payments, and this is replicated in e-money and international remittances, but we see very few or a dearth of frameworks in P2P lending, with just 6 jurisdictions having a framework to regulate this activity, although we note that 5 more are planning to introduce one. There are also 6 jurisdictions who have a framework for ECF, and additional 6 are planning a framework. In total, there are 9 jurisdictions planning to introduce a further 12 regulatory frameworks for the researched fintech verticals. Next slide, please. As with the analysis of regulatory frameworks above, this is not an attempt to rank jurisdictions, but to showcase the wide range of different approaches within the cross-cutting areas that we have mentioned previously. So all else SSA jurisdictions have an AML framework, while 17 have financial specific data protection. However, we note that only 10 jurisdictions have a framework for EKYC and 5 plan to introduce one. Of the jurisdictions we reviewed, only Kenya, Malawi, Nigeria, Rwanda, South Africa, and Zimbabwe have frameworks in place for all the investigated cross-sectoral issues. Overall, there are 9 planned frameworks in 8 jurisdictions. It is important to note that cross-sectoral regulatory frameworks are often not under the remit of one stakeholder, and yet they can be very catalytic in their efforts to promote regulatory objectives. And the creation of enabling regulatory frameworks also requires clear and effective cross-sectoral regulation, often requiring cooperation across government authorities in the broader financial space. Next slide. Now, we recognize that there are many factors that affect the development of financial markets. However, our findings suggest that there is some evidence of links between regulatory frameworks and market development. As a positive outcome in SSA, we see, particularly in digital payments and e-money, there's evidence that existence of regulatory frameworks and broader institutional infrastructure has supported the increase in mobile money account ownership. Although market activity can take place outside of regulatory frameworks, there is some evidence that not having regulatory frameworks in place can lead to relative lack of activity. For example, in the case of ECF, where we have only 6 jurisdictions in SSA with a regulatory framework. And this could go some way to explain the relative inactivity of ECF markets in SSA. In terms of peer-to-peer lending, there's some evidence of markets developing without a regulatory framework, but through regulatory direction. And a good example of this is in Ghana, where according to a 2021 CCAF market study, market activity in Ghana is significantly higher than any other country in SSA, at over 500 million. While Ghana does not have a bespoke regulatory framework for P2P, the Bank of Ghana has been explicit in signaling to the market its interest in P2P lending, for example, by giving preference to supporting crowdfunding products and services in its regulatory sandbox pilots, and by explicitly voicing its desire to promote innovative digital crowdfunding solutions. It is also worth noting that the existence of regulatory frameworks covering fintechs is just one of the preconditions that might be required to allow for fintech market development. There is also a need for clarity in cross-sectoral areas that we looked at, for example, cybersecurity and Ekyc. Next slide. Now, just really quickly, this is a figure that shows the link between frameworks and markets. And we'd like to just highlight some of the findings from the global COVID-19 FinTech market rapid assessment study that have a bearing on the regulatory approach to FinTech. And it's interesting some of the FinTechs requested from regulators. In particular, we note from the slide, FinTechs saying that they were urgently in need of regulatory support measures, including in areas such as faster authorization or licensing processes for new activities and streamlined product or service approval and Ekyc. A few points to mention in closing. We have seen that the study findings demonstrate that regulators from the SSA regions are taking various steps in advancing FinTech regulation. It's significant that there are proportionally less regulatory frameworks in SSA for P2P lending and inclusive crowdfunding, as well as in Ekyc in comparison to other regions like MENA and APAC. On a positive note, we see increased regulatory innovation initiatives, which is very, very promising. And with respect to the regulatory approach, the prevalence of FinTech-specific regulatory frameworks may be considered the first step to enabling FinTech environment. Additionally, regulators who have responded to our surveys have indicated other areas of assistance that may support them in developing the regulatory approach to FinTech, including things like skills development, technical support, as well as digital solutions being the most frequently cited. Thank you for listening, and I will...
For Sub-Saharan Africa, so watch this space. I will give a brief pause to see if there's any questions. And if there are no questions, I think we are actually well ahead of time, thanks to Patrick's and Sarah's great work. So I think since we seem to have no questions, then I think I will pass over to Sarah with time to spare, to Dee, sorry, Dr. Dee Allen with time to spare.
Thank you, Alex. Good morning, good afternoon, good evening to everyone. I'm Dr. Dee Allen. I'm the head for capacity building and education within the CCAF. I also lead the Cambridge FinTech and Regulatory Innovation online program, the CFTRI. So I'm going to be talking to you about the CFTRI itself. The CFTRI is an 8-week online program the program provides a safe space for regulators and policymakers to come together and learn about fintech and regulatory innovation. Next slide, please. Thank you. To date, we've had about 7 cohorts. We're currently in our 7th cohort as we speak. And you can see this program is really global. We've had over 1,200 regulators join us on the CFTRI program from 300 plus institutions and 140 countries. So it's truly a global program as far as we're concerned. Also, next slide, please. So far, we've had SSA participants of around 395 join us from 80 institutions and 40 SSA countries. We've had participants from Angola to Zimbabwe join us on the program itself. Sorry about that. Next slide, please. Next. Brilliant. So the program is structured over 8 modules. We start by introducing learners into the technologies that fintechs use, and we go into the business models such as digital payments, digital assets, digital lending and capital raising, and then we end by looking at regulatory innovations such as innovation offices and regulatory sandboxes and regulatory technologies. But a key aspect of the program is the Capstone project proposal. We make sure that all participants work together in a group of 2 or 4 to work on a Capstone project proposal that will take back and implement in their institutions and regions. But really the unique thing about the online program is the fact that we have live sessions. So on a weekly basis, we'll have live guest speakers who will talk about the topic for that week. In addition to that, we also have live tutorial sessions where we have tutors, expert tutors that work with our learners on their project proposals to help them develop the project proposals and also discuss the key topics for that week in more detail in small groups. At the end of the program, when all participants have presented the project proposal, they're provided with a Cambridge certificate and then asked to join our alumni to really share knowledge on our regulatory knowledge exchange platform. So the key thing about the program is the fact that we provide both synchronous and asynchronous learning. Next slide, please. So we now want to introduce the CFTRA Africa. The reason why we want to introduce the CFTRA Africa is because we've had the demand come from both our learners and funders. And what we want to do is just 2 main things. We want to increase the breadth of non-participating institutions and countries in the region to join us. Because so far we've had about, 40 countries, but there are other countries that really want to take part in the program. So CFTRA Africa will provide the opportunity for those countries to join us. In addition to that, we want to encourage intra-regional cross-stakeholder engagements across fintech, regulator and policy-making communities in Africa. Because in the CFTRI, so far, we focus mainly on the regulators and policymakers, but we've decided that for CFTRI Africa, it's an opportunity for us to bring in the fintechs to come together, for us to work together, learn, share knowledge, and work on projects that we can go back and implement. So a really unique aspect of CFTRA Africa is this opportunity for fintechs and regulators and policymakers to come together and work on the program itself. Next slide, please. So what are the key features of the CFTRA Africa? Well, the first thing is the fact that we're going to introduce African specific case studies and content. We're going to make it contextualized to the African region, the SSA region. We're also going to have tutors, speakers. We're carefully selected because they've got deep experience in the African region, and so they can share their knowledge and expertise in the topics that we cover. We're also going to encourage collaboration with African FinTech Network. The FinTech Network will give us an opportunity for us to drive continent-wide engagement and to get participants and funders to come and join us and work on the CFTRA Africa. And then one important aspect also is the opportunity for us to use this new program to sort of leverage our convening power to bring the collaboration network of the CCAF, the FSDA and African FinTech Network to come together to create co-learning and cross-stakeholder knowledge exchange. Next slide, please. So I'm really glad to say that we're going to be launching the CFTRA Africa pilot program next year on the 16th of February 2022. The program is going to be for 8 weeks. What we're going to be saying is that we want fintechs, regulators, policymakers to come together to join us on this program. You're going to be committing about 5 to 7 weeks, hours per week on the program itself, and the program fee is just $2,000 US. We're really excited about this. This is an opportunity for us to really come together and learn and really talk about what's relevant for the SSA region, as well as fintech. And
what's the turnout from Francophone Africa, and is the platform or is the program sure that it's open to French-speaking participants?
Yes, very much so. At the moment in time, we've introduced a new tutorial group for participants that speak only French, for instance, from Francophone African countries, to join us. So we provide sessions in French and materials in French to really support those learners. So we are open for learners across the continent, across the SSA. If you're a Francophone speaker, you are welcome to join us. We have the facilities to support you throughout the duration of the program itself. So yes, very much so, everyone is welcome across the globe. We want to see SSA learners come and join us and provide them with customized learning opportunities over the 8 weeks.
Thank you.
Thank you. Over to you, Tanya.
Thanks so much, Dee. So good morning. My name is Tanya Ziegler. I'm head of global benchmarking here at the Cambridge Center for Alternative Finance. And I'd like to talk to you this morning briefly about our global COVID-19 FinTech market impact and industry resilience study. If we go to the next slide. So this is a joint study that we are currently conducting alongside the World Bank Group and the World Economic Forum. This new study, serves as the bookend to last year's COVID-19 market rapid assessment, which Sarah actually presented some slides about in her very good presentation earlier. In response to the unprecedented impact of COVID-19, our center, together with the World Bank and the World Economic Forum, conducted a global study last year to understand how financial technology platforms around the world were responding to the challenges of COVID-19 strategically, operationally, and certainly in terms of their regulatory and policy needs and how they were responding. We published this first report last year in December 2020. It was received by over 45,000 views in the event that we conducted when it was published, and it has now been downloaded over 5,000 times. So to say that it has a substantive reach would be an understatement. Given the persistence of COVID-19, and then certainly the important role that FinTech is playing in facilitating payments, remittances, providing urgent loans, working capital, creating insurance opportunities, effectively an array of essential financial services to individuals, customers, households, it became really clear that we needed to continue this research. And so this new study is exactly that. It's the bookend to this, where we're now trying to understand. This new study is going to aim to build upon those key findings from last year, but certainly to now capture empirical data from the verticals that we're looking at within this study, which would be the same as, more or less the same as last year's, to be able to provide a really strong understanding of what's happening with fintechs globally, but also in the SSA region. As many of you, sorry, we're not quite there yet, Alex. As many of you will know, the Sub-Saharan Africa jurisdiction has been creating solutions in financial technology that have had huge impacts as related to COVID-19 for individuals and households, in particular around the digital payments arena. And this is one of the reasons that we're really keen to talk to you guys around some of the different ways that financial technology firms can get involved. In terms of the study aims for this new study, we are literally picking up from where the last study left off. We're collecting data now to gain shorter and medium-term insights into sort of 4 overarching key areas. The first is really understanding the quantitative changes that have occurred within the sector. So looking at 2019 and 2020 transaction volumes and other KPIs that relate to the fintech industry. We also want to understand the strategic shifts and changes that financial technology firms have implemented as it relates to the client-facing products and services that they offer. We want to understand, how firms are servicing those populations, those end users. We also want to look at the policy and regulatory assistance that firms are receiving. So when Sarah noted in her presentation, what were the core areas that financial technology firms actively need help from their regulator or primary supervisory relationship, this is exactly what we are testing further to understand what are the needs that financial technology platforms need, what are they relying upon, and where can regulators go further. Equally, we also want to understand what financial technology firms can do relative to COVID-19 relief schemes, how they can partner and participate with their governments, either their home governments or other. And last but certainly not least, is really looking at how financial technology platforms serve key population segments, in particular women, micro, small, medium-sized enterprises, and those that are traditionally excluded. We are, one of the mandates that we have within the center is to really understand financial inclusion. And so this study is really starting to focus in on actually how financial technology platforms are delivering solutions to those that are unbanked, underbanked, or have been marginalized from the traditional finance sector or ecosystem. We can now go to the next slide. Thank you. With respect to the kind of platforms that are being included in this study, as you can see, we have a very large and wide overarching evolving taxonomy. When we devised our taxonomy, we worked very closely with other researchers, and in particular with trade bodies and organizations that are actually on the ground with fintechs. We also worked really closely with a large group of financial technology platforms that make up our advisory board to make sure that our taxonomy is truly reflective of what is happening on the ground right now. So what you will note in the first sort of larger column is the overarching primary verticals. And so as you'll see, we have a number of primary verticals that are very retail facing, so end user facing, consumer facing, customer centric. We also then include models such as regulatory, RegTech and Sub-Tech, alternative credit and data analytics, digital identity, exchanges, those that are a bit more market provisioning or infrastructure focused. So we really are trying to cover the full remit. Now, certainly if you are a platform that falls into any one of these parameters, you are eligible to take this survey. And in fact, we ensure that there's logic within our study so that you are receiving the questions that are only viable and make sense for your vertical. Because although we are trying to test sort of larger scale questions, we also understand that context is key, and that actually creating paths that are specific to your vertical or specific to your region, in particular SSA, that is really important. And so throughout the survey, we test specific areas either by country, by jurisdiction, or certainly by overarching model type. If we go to the next slide. So how can you get involved? Well, certainly if you are an AFF member, you have been invited to this survey already. And actually one of the benefits of being an AFF member and responding to the survey is that we are going to be holding later on in the year when the results are out, a workshop just for you guys about the results that are specific to SSA. Similar to what Sarah just presented, like showcasing research that hasn't even been viewed by anyone else yet, you too will have that opportunity. All you need to do is dedicate 20 minutes of your time to respond to this survey. So this survey is being launched on Qualtrics. The University of Cambridge is the data controller. That means that it is only the University of Cambridge that will be seeing your, and by university, I mean, in this case, it's 7 people, myself and 7 other people, that will be looking at the raw entries. Upon receiving any survey entry, we go through it, immediately anonymize and aggregate. And so our actual data analysis and data reporting is conducted on a fully aggregated and anonymized data set. So when we are reporting findings, we're doing so at a high level. We always need to have enough observations in order to do that. If we feel that we do not have enough observations, then we are not able to report on either a specific region or a specific underlying model type. The survey is being hosted in 10 languages. We also can provide an Excel version or a PDF offline version. And so that's the survey in a nutshell. Now, with respect to the kind of questions that you will receive, some of them are quantitative in nature. You will be asked, what was the transaction value that was delivered upon your platform or through your platform in 2020. But then we also have a number of questions that are qualitative that really ask for your perception towards the impact of COVID on your business, how you've been able to work with government, how you've been able to work with policymakers, but also what your needs as a FinTech are. It's very important that we have a robust panel because obviously this research is viewed by literally thousands of regulators and policymakers around the world, but it also is consumed by the sort of mainstream media. So making sure that an ample amount of firms respond is of critical importance to make sure that when we're describing the SSA ecosystem, we're doing so in the right way. And for firms that do respond, if you then submit your logo, you will also be included in the final report with your logo included, though your data will not ever be name checked to the specific platform. Your logo will be included if you want it to be. And you can also participate in some of the different marketing and promotional materials that will go alongside this study. We have a couple of different iterations of the survey. So if you're a platform that's relatively young or a beta platform that doesn't have transaction history, we have a shorter form version of this survey that you can respond to. We also have a shorter form version of this survey if you were a platform that responded to the global benchmark last year. So our team is very highly motivated to have you participate and to make this the easiest possible participation. We just ask for 20 minutes of your time, and what we then provide back to you is really the largest globally comparative market research piece that is in the public domain and available for free for anyone who wants to view it. So my name is Tanya again, and that is our study. And if you are a platform,
Tanya.
Thank you. If you're a platform, please participate. And if you have any questions, do let us know.
I would say thank you for your comments of where to access this information. The research will always be on our CCAF publication, but please do reach out to the emails provided by Dee and Patrick that will connect you. Over to you, Patrick, for the final comment as we are in the final minute. Thank you, Tanya. Sorry to jump in.
You also say thank you again to MAF, Economic Development Board of Mauritius, the Mauritius Authority, AFN, and thank you all team. So these are the latest happenings here in SSA. Please sign up to the survey. Please ensure to sign up to CFTRIA, and the publication of the African FinTech Regulation Report will happen in the next few weeks. Please check our website. Thank you all for your attention.
Thank you all. Have a great rest of the day and exciting festival.
Thank you all.
Thank you all.
Thank you.